Good morning, this is Connor from 0DTE Traders here to present our market minute for June 3rd, 2024. It is 10:20 and the SPX is trading higher, up 0.3% to 52.90. It is much more neutral than imbalanced out here this morning. On a positive note, Qs are outperforming, up 0.7%, so if this persists, downside could be limited. SPX is trading above the flip of 52.60, meaning we are back in positive gamma and dealer flows are supportive. So we're back in that buy the dip regime. Dollar is down 0.3%. Treasury yields moving lower in tandem. That is also a bullish indication. Now on the bear side, we got VIX catching a bit of a bid, up 2%, although this is looking to be a spot up, vol up environment. However, if the market turns down and vol picks up, it will be an exacerbating factor. In other words, higher implied volatility will invoke sell flows into the market. Also, we have defensives, mixed, and traditional cyclicals largely red. So as far as sector performance goes, it is much more neutral rotation opposed to imbalance. In terms of levels, not a whole lot has changed. 5,300 to 53.10 remains resistance and pinning zone. I think we're all familiar with this, given the action we saw in the last OPEX cycle and the week following, several pins in that zone. Now beyond that sits 53.25 resistance, also quite significant here in those 2 weeks as resistance. Above that opens the door to the all-time high of 53.41 and gamma resistance at 53.50. Now, support on the downside shows at ES 5300. Okay, that is SPX 5283 equivalent. We are bouncing off there this morning. A break opens the door back down to the flip of 5260. And this is our transition, above bullish, below bearish. In terms of 0DTE options volume, we're also seeing call volume positioned up here at 53.10. So this is our max call, generally regarded as the upper bound. As far as the downside goes, 52.70 as the max put, generally regarded as the lower bound. Now this is volume, so it is dynamic, subject to change. But this is generally what we look for to determine market sentiment, which is bullish here, given the fact that there's more calls than puts, in addition to the trading range, as we just highlighted. Now going over to our gamma charts, the SPX is in positive gamma, plus 280 million, trading above the flip of 52.60, so below, destabilizing, above supportive. Although I really want to stress the point, the market is much more neutral than imbalanced at this juncture. We see that reflected in intraday metrics, but also the options positioning. So kind of a battle for control is what we've seen lately. And we can see just how many times we flipped that, essentially the flip level to zero gamma, going from, well, positive gamma to negative to negative, back to positive. So clearly a battle for control, and we don't think the bulls nor the bears have quite won out just yet. Now, as far as the big levels, kind of the range for our swing traders, we have 5,400 as the call wall. This is the logical upside target, but again, quite a bit of resistance and a new all-time high is required to see that. As far as the downside, 5,200 is the put wall. Recall, we had a very strong bounce off that put wall on Friday, not surprising. But it does look like there's potential for the put wall to shift lower this week if we break back below that flip and there's put demand, which essentially is going to drop our lower bound, where we could potentially see more downside. And that could either be to 5150 or 5100, both contenders for that put wall designation. Now, in terms of volatility, options are pricing in a 0.7% implied move today, and that's going to hold true up until about Friday, when we're going to see a slight uptick to 0.8%. That is for non-farm payrolls. But other than that, implied vol is quite low. Additionally, a 5-day realized vol has been quite lackluster as well, despite the volatility we've seen. So perhaps, we just kind of revert back down here and continue to see lower volatility. And where are we going to see the change in the vol regime is probably going to be a break of that 5200. So if we break 5200, that's when we're really going to anticipate higher implied volatility and higher realized volatility. What the market could be doing here is sort of just establishing a trading range with 5300 on the upside, 5200 on the downside, into some volatility events. What do we have here? 612 is the FOMC, 621 is the triple witching. So again, the market is much more neutral than imbalanced, and well, we need some sort of catalyst to spark that repositioning and the next directional move. All right, guys, that's all I have for you. If you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com. Best of luck out there today.